What price should you be paying for any investment? Well, it's more than just fundamental value. Check out this video to find out what other things you should be looking at. Hi, Jim Gore from THOR Wealth Management. In this video, I'm going to be talking about how you can get the price of any investment. It's very important that it's just not fundamental value that you look at. Now, what do we mean by fundamental value? Well, for example, let's just look at a house. If I'm going to build just the house itself in Bethlehem, Pennsylvania, or Naples, Florida, the cost of the lumber, the appliances, the carpet, all that are going to be very, very similar. That's what the price of building that home is. But one area would cost more than the other because of the land value, obviously. But the fundamental house itself is pretty much similar if you're building the same house in any part of the country, because you're getting the materials. You might pay a little bit more for labor, but it's not a meaningful difference that you're paying for. One other thing, so that's fundamental of a house. Now, stocks. Stocks, you can get any of this analysis. This is from Yahoo Finance. You can get their PE ratio, to PEG ratio, price to sales, and a lot of other statistics. Are insiders buying or selling? That's just a fundamental value using historical value, data. And you can come up with hey, this is what this company is worth just based on what the assets of the company are. Obviously, we use a lot more robust analysis here at THOR than Yahoo Finance, but it's just a picture of showing how it's easy to get the fundamental value for any individual company. But very, very important, fundamental value does not equal what the price should be. There's other determinants, and this is very important. First, longer term. When you're making a long-term investment, I'm saying 5 to 10 years. These are the sorts of things that are going to be benefiting you from a house and from a stock. For example, and I'm just using a couple of things here, simple ones. Hey, the company, are sales growing? Are their margins expanding? Are they coming out with new products that people need that's going to make the stock price go up? So I put that into my analysis for the future, which is very, very important. If I'm buying any real estate for a house, demographic changes. Do people want to move to this space, whether they're getting older or younger? Schools, for example, do they want to be in a school district that's good? The other one are taxes. We're seeing that right now. Over the last couple of years, you're seeing high tax states. People are moving and going to lower tax states. The other one, now we're seeing reversal in some of the prices in Florida because insurance rates are going up. So insurance costs go up. Hey, people are starting to say, I don't want to own this because it's too expensive to insure. And that will have a determination on your price of what you're buying in real estate. Now, that's just looking at longer term, making the investments. So shorter term and medium term, what's going to determine price more is supply and demand. Figure this from an auction. Okay, if I'm a seller at an auction, do I want 1,000 people at the auction or 5 people? Well, if I'm a seller, I want more people out there because the prices will bid up and the price goes up. However, if I'm a buyer, I want to go to an auction where there's only 5 people buying. Why? Because they get things cheaper when doing that. So that's very important, is to look at supply and demand out there. And I got 3 examples here in the stock market where we've seen the supply demand get out of whack. First of all, in 2000, after 1999, everyone was buying technology. All the money was there. In order to make money on any investment, I need someone to pay a higher price than I pay for that investment. If all the money's already there, like it was in technology in 2000, that will limit my upside, which is what happened the next decade, really. You didn't make any money on those technology stocks. In 2008, we saw the same thing with international emerging markets. We would have those reps come in here and we'd ask them, what are you seeing from other registered investment advisors? And they told us, hey, they're 40 to 50% in international emerging markets. I remember coming out of the meeting and saying, hey, if they're already at 40 or 50% in international emerging markets, who's going to be buying that from me? All the money's already in that space. And what we saw is international emerging markets went down for the next 10 years. Now, in 2025, we've seen a reversal in gold mining stocks. No one wanted this, even though the fundamentals of gold was getting better. Prices were going up, the margins were going up in gold mining. And now we're actually seeing there's more demand for gold, not only from individuals, but also from countries. And I've talked about that in other videos. You can go back and look at that. So from an individual buying it, so supply and demand is very, very important to try and figure that out. And one of the things that we use here at THOR is technical analysis. So we have the fundamental analysis, but we tie in technical analysis because this tells us if there's less buyers out there, but more important, are buyers starting to come into an investment, because that's the time that you want to get in early when people are showing up. And then when everyone is there buying it, hey, that's when you want to start reducing your position in that size. If you have any questions or concerns or need help with your portfolio, as always, reach out to us at thorwealthmanagement.com or give us a call. Take care and talk to you in a couple weeks. Subscribe to the THOR channel today.